Happy Friday, traders. It's 8:01 a.m. Chicago time on the 14th of December, 2018. Believe it or not, we're halfway through the month already, and rollover is in full effect on the U.S. equity indices. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is taking risk off. We've got the NASDAQ down about 0.9%, 90 basis points, 61, almost 62 points down from yesterday's settlement. The cable's taking the biggest hit, down 117 pips. And the leader today is the almighty US dollar. With the U.S. Treasury bonds up 9 ticks, the Bund is up 20 ticks, and the 10-year note up 4.5 ticks this morning. So that's where we stand. The S&P is off 20 points, so we have a 20-point gap. We are gapping right into, I believe it was Tuesday's range, and it's. We'll go over it in a minute, but yesterday's primary scenario played out almost to a fault. So that's where we stand this morning. Risk off is the overnight sentiment. Looking at what's ahead, we got some numbers earlier, and Germany and Eurozone reported PMI services and manufacturing. We got retail sales in the U.S. We're looking for PMI services preliminary. This could be a mover at 9:45 Eastern, 8:45 Central, so 15 minutes after the open. And then we get business inventories at 10 Eastern, and that's it. We also had a parade of ECB speakers uh, earlier today during the European session. And today, a reminder that at 1:30 Central, 2:30 Eastern, WTI December 18 options expire. So that's where we stand. That's my story, and I'm sticking to it. Crude oil still trading January. Crude oil is down 28 cents or 0.5%. Let's take a quick look at what we expected yesterday versus what we got. Yesterday, I was looking for, as a follow the green line, I was looking for a test up into the overnight high right here. Looking for a poke through 2674.50 into 2675. Rotate back down. Consolidate in the 26 consolidate in the 2659 area for a small bounce that I was looking for it to drop. I was looking for one-time framing up to end the one-time framing up to end yesterday. I was looking for a break of the prior day's high, and I was looking for 2642 for a bounce back up. And then I expected some selling into the close, which didn't take place. It did take place right after the close, though we did get a bounce back up into 2660 or so before the market closed. So the plan was 2675 or so, take out the overnight high, impulse down, push through a small bounce in the 2661.59 area, then push through the prior day's low into 2642 for a bounce. That's the plan, the primary expected plan, the pie in the sky plan. And this is what actually happened. Let's shut this down. This is what actually happened. We had a tight opening swing. We break higher, and then we push into 75 and a quarter. Remember, 75 was the expected test early, and then we push down and through. We had a bounce earlier at 57. I had my line up at 59. We had a bounce at 57 that took us to 75, so this happened in reverse a little bit, but we ended up pushing down and through the prior day's low. There it is. So now the one-time framing up on the daily is finished. So sellers are victorious here so far. And then we chop around in this zone. We make an attempt at 2665 again from below. That was yesterday's open. And then we break down and we finally get to the key target of 2642. We push to 2641 and a quarter. Lots of chop yesterday, and several rejections of the mid. So the mid was rejected here on the pullback, bigger pullback, really big pullback, an additional pullback, and then we started to sell off before the market closed. Again, contrast that to the plan that was outlined here, and you get my point. So was it were we looking to predict the future and therefore trade the future? No. All we did was we were looking for what would happen if it rejected the overnight high and we had an impulse down and we started to take out the prior day's low. And then we follow that plan, right? Once we see, hey, this just took out the overnight low, okay, I'm going to look for areas to continue to get short, look for mids, pullbacks to IB, pull back to the OS, whatever landmarks you want to use. It doesn't matter. Fibs, crossovers, moving average crossover, whatever. But the intent of the scenario is to keep you in there. That's the goal. The day type, someone's asking, is normal variation day. Okay, normal variation day, liquidating early. Long liquidation is indicated. We move away and then we hold steady. But normal variation day, the expectations for the market to continue lower. The low yesterday was somewhat weak. We did have a good taper though, but multiple tests there on the 41 and a quarter, 41 and a quarter, 41 and a quarter, 41 and a quarter, and before the bounce up. So we left behind this multi-low. From here, donde? Oh, there it is. Um, from here, you can see from the overnight action, we try to bounce up on the overnight, and then again impulsive down on China. China reported further slowdown in their economy. Just bad news for China, potentially good news for the U.S. in the trade talks. And then we put in this bear flag. This is a smaller bear flag than the daily one we've had in the ES, and it broke lower. Another bear flag, break lower, and then we're currently just consolidating. The European markets came in and they sold even further. So this also looks like a long liquidation to me, very thin up top, kind of like my hairline, very thin up top, and we have the bulk of the trade occurring at the bottom. We are below mid, below VWAP, below the prior day's range. Things are looking pretty good for sellers. The inventory is mostly short in price and in volume, although be careful using delta during the rollover. Also, remember with rollover this entire week, today and going through all the way through the next Friday, expect a lot of chop because a lot of what needs to happen, what's going to happen over the next week is a lot of big option positions, especially near major strikes, are likely to be hedged using futures. That's called delta hedging. So as the market as big option positions go out of the money, at the money, in the money, there's the delta keeps changing, and so futures have to be bought or sold to compensate for that. So it causes a lot of chop, especially against strike prices, which is basically every 5 points. And then the major strikes, 2650, 2600, and so on, is even more so. You can see where the open interest is. Just go to the CME and look at the options that are expiring next week, and you can see where the open interest is. And that gives you a little bit better idea of what to expect. But it doesn't matter. This coming week, expiration week, is traditionally, at least personally for me, and I saw this from most of my traders, is traditionally a pretty tough week to trade. So it's a good week to be very, very picky with what you're going to do, and to be patient. This is a good time to exercise patience and just to let things kind of come to you, let the setups come to you, and almost wait for near clairvoyant clarity before you get into position. It's almost like the trade that you want to take, the setup is too obvious for you to ignore. That sort of approach when trading. So let's look at what we expect for today. So that was the review segment. But before we do that, I want to remind you it's like Friday. Please find the thumbs up button on YouTube and hit it to like the broadcast. That helps me out. And of course, this is being brought to you as they have been by Convergent Trading, convergenttrading.com, a community that I'm building for serious career professional traders, right? People who are pursuing a dedicated path to learning. Um, so what are we expecting for today? By the way, check out the 20-day average volume. That's the 20-day average for every 15-minute slot here versus what actually happened yesterday. I mean, volume was just not there, and that's just the behavior on rollover. I'm monitoring the roll, and it's almost catching up. The Where is it? So I'm monitoring the roll, and you have um, these are the volumes right here for the ES. You can see that there's a plus about 44,000 more in the December than in the March contract, but that's likely to reverse very quickly after the open. Okay, so what are we looking for today? Today, being as it is Friday, today I'm looking for the market to make an attempt at reverting back. We have pushed not only the prior day's low up here, we've pushed this low in the overnight session, and we are trading solidly into the 10th. Actually, is it the 10th? Yeah, I guess. Um, Trading into the 10th. So to me, it looks like we are likely to make an attempt higher. If we do get a bounce, it's likely to be in this zone here. A little bit of confluence in the 26.25 and 26.20 zones. I'm looking for an open auction out of range. Remember, we're in a big bounce area, so open auctions are common. Looking for it to push down. I'm looking for responsive buying to take us back up as we take back some of this China news, and I'm expecting it to push back up into 26.42 for a test, chop around, and fall back off. I expect it to be a lazy afternoon trade. That's the reversion. That's the reversion trade or the responsive trade. The initiative trade is the open takes place, we immediately move higher, and then we cannot close the gap. We impulse down. We've been closing the gap from below by the end of the session more than not. Expecting an impulse down, consolidation in this area here before we give up the overnight low. If we give up the overnight low, I'm looking for 2602, the 2602, 2603 area, 2600 area first, and then I'm looking for it to start slipping through. The extended target, if we do get some serious selling, is 25.85 and a quarter down below. Okay, so this is responsive, fail to respond, and then spike lower, impulse down, and start to push lower. The third scenario is completely responsive, um, which is still in the cards. This is a move down off the open, push the overnight low, and then come back into the range with an impulse, consolidate in the middle, and then start to move back up into balance with yesterday's point of control at 2651, the 26 mid-century figure. So that's how things are shaping up for today. This is the type of day I'm going to wait for the PMI release to get past this. Uh, to get past this. So I'm not going to trade in the first 15 minutes at least. And I'm looking for the market to show its hand. I want to see which side has strength before I even bother getting in on anything. Good luck today. It is Friday. We are in roll. So be careful. It's going to be very choppy and a higher probability of emotional trading today into the weekend. Be careful. Take care.